Hi traders, it's Roberto for Forex Circle. This is another video on price action. Today we're going to talk about two things. Taking trades at certain times of the day, specifically London close and price action. So we're going to focus on candlestick patterns and specific times to take a trade. London close is one of my favorite times to trade because when the markets have completely exceeded its daily range, around 12 noon, 1 o'clock, between 12 noon, 2 o'clock Eastern. That's a window of opportunity. And usually the trades take a direction opposite, so it's a counter trend trade, and you can usually take that trade for about 2 or 3 hours. So let's get started. Let me just show you those trades. And if you look on the left hand side on the notepad here are the London close trades that I took. There were several. There were about 1, 2, 3, 4, 6 prior, day before that. Asian London close. This was the Asian London session, I'm sorry. June 5th. Here they are. We had 8. So I'm going to go over those trades. I'm going to show you how to execute these trades, when to look for a trade, and when to stay out of trades, what pairs not to trade, or specifically what pairs at a specific day not to trade. So let's get started. One of my favorite pairs to trade is the yen crosses. It's so predictable during the London close, especially when the market's done its daily range. And here's a great example. This is Friday, so that doesn't count because it was non-farm payroll. Thursday, here the market started, New York session, it's sold off. So what do? The first thing is calculate the number of pips. Very important. Number of pips, 233 pips. Now, if you cannot get a retracement after that, then you should get a retracement. So the market went up about 163 pips. I wouldn't have taken this trade until this candle was closed. Entered on the next trade. Remember this window of opportunity. You don't really have to oftentimes wait for a candlestick pattern. Just know that if the market printed 334 pips, which is exceeded its daily range, around 2 o'clock, between 12 and 2 o'clock, you should be able to take a counter trend trade. And I would have just entered this trade after this candle closed, entered on the next trade, and this being went up over 100 pips. Normally I get out before the Asian session, and around this area here that would have been a great exit right there. Let's look at some more trade setups. Sometimes the trades aren't there. For example here, market sold off, but there was not much of a retracement. It did go up about 20 pips at the close of the London session, but if you held on to that position, it actually retraced the next day. Okay, so and I see that often, but because the strategy, the trade rules are take that trade at the London close and get out before the Asian session because you don't know what's going to happen. Here it went up, okay, 109 pips, so it did retrace, and all the way up to the swing low used to be a support, turn resistance. Okay, it's very technical. So you could have taken this trade, put your stop loss below here, and wait till at least you're in profit 10 or 20 pips. It doesn't matter. It's just that the markets always tend to retrace. And so let's see, we have any other trade setups here. The same thing. The market found resistance a little bit earlier. Here's the trade. So what do? Again, count the number of pips. 24-hour sessions, that's what these perforated lines are. Here's the swing high, here's the swing low. And so what I would do is just count the number of pips. How many pips? I can't get this crosshair to work. Just 1 second, please. There it is. Okay, so it went down 149 pips. This is the end of the London session close, so take a trade, went up 89 pips. Every day, the way I've been able to find these trades is simply doing what I'm doing right now. It's just going back in history. Market goes up, and then by the time London session closed, this is like an opposite trade. Market went up at New York session, it sold off, and that's the London close down here. You would take a trade in the opposite direction. It went up 73 pips. So even though the market went up during the London and stayed up during it sold off during the New York session, so you want to be looking to buy instead of selling. Okay, so each trade, whenever the market is going, if it's going down, then by London session you want to take a counter trend trade. Here the market sold off. Here's the London close down here. Market went up about 67 pips. Now, of course, you're not going to make a lot of money just taking counter trend trade on one pair, because if you're just targeting 20 pips in each pair, then that's only 20 pips. So what I do is this. I line up all these pairs, and usually I like doing this on the yen pairs, specifically Swiss yen, euro, yen. Let me just pull up the other yen pairs. They work really well with pound New Zealand, Aussie, euro Australian dollar, pound Australian dollar. But that's another. I'm just going to pull those trades, those pairs up later, and just show you just these right now. Okay, very simple. Here's a pound yen sold off. Here's the London close. Market what? Turns around and heads north, and puts in about 141 pips the opposite direction. Okay, and then we just move on. Just go back in history. Let me just pull up the chart bigger. You just go back in history and just look what has the market done prior to the London close. If the market sold off like here, 132 pips, this is the London close. Obvious, because these wicks here are telling you that the market doesn't want to go any lower. And why would anybody be selling at the London close when the market, from the Asian session, that's all it's been doing? And then by the London close, everyone is ready to get out of their positions, and it retraces. Okay, that's 87 pips down, 130 some pips down, 87 pips up. Of course, probably we're not going to be able to get that whole 87 pips. Number one, because of the spread. Number two, you have to wait till the market, looks like it's going to turn around. And I would have definitely entered the trade when I saw these two wicks. I wouldn't even have waited for a color change candle. Just these two wicks alone tells you market doesn't want to go any lower. Just like here, it didn't want to go any higher. You see this here? Wicks are your friend. Just pay attention to wicks. Started from the previous day. Look how many times market tried to penetrate this level at a previous support, turn resistance. We're in a downtrend from the day before, so the market sold off. But London closed, look what happens. Okay, so you want to take advantage of that trade. I know that London closed, if you live in Australia, that's not an ideal time for you to trade. That's what, 12 o'clock midnight. But and if you can anticipate that move before you go to bed, put maybe a 40 pip limit order, a 30 or 40 pip limit order, stop losses below that level, and take that trade. Okay, so let's see some others. Okay, so it's exciting. It's really exciting to know that every day that the markets, they do the same thing. They want to put in the daily range. That's what the markets do. It's decided a long time ago that if its daily range is 120 pips or 150 or 200 pips, that it's going to put that in, and then it's going to stop around the London close and reverse. Okay, so here the market shot back, went up, did its daily range, and turned around and went south. You could have taken this. It started before the London close, and that was a great trade to take. Here, the opposite. Price went all the way down, found support. We have a nice pin bar, and this whole area around 12 o'clock, 2 o'clock in the afternoon tells us that the market is finished selling off, and it retraced over 85 pips. Okay, I can go on and on and on and go back in history and just show you this 1,000 times on about 24 pairs, and you see the same thing over and over again. Okay, it's just being able to qualify those trades. Find a pair that's put its daily range, and around between 12 and 2 o'clock, take a trade in the opposite direction. This thing went 120 pips on a retracement. Okay, that's why I like trading the counter trend trades on London close on the yen pairs, because if they have exceeded its daily range, for example, here is an even better trade. Price went up at 232 pips. Here's the London close, shot down, 50 pips on the same day, but if you would have stayed in that trade, gave back almost everything. Okay, so let's go on. Let's look at some other pairs other than yen pairs. 1 second. Okay, I switched all the pairs to Euro New Zealand, Pound New Zealand, Euro Aussie, and Pound Aussie. The reason I like these pairs is that their daily ranges are substantial, so their retracement should be substantial as well. So let's take a trend when the market started trending. Here's back June 4th, right? So very important. Count the number of pips the market put in before the retracement. 196 in one day. Okay, and then it retraced about 50. Okay, so that was your trade right here. So just put an arrow. This is the London close. I would have entered the trade probably around 1 o'clock. I wouldn't have even waited for the next candle to close. I'm always anticipating that. Let me just make this bigger for you so you can see it much better. Okay, I'm not even waiting for a color change candle. I'm just waiting for a period of time, that time where I know that the markets are going to close, usually around 1 or 2 o'clock in the afternoon. Okay, and I won't get out until I'm in profit. And if I'm trading 4 or 5 pairs, I'll target 20 pips each. That's 80 pips for just trading the London session, London close, which is not even, there's not even a lot of volume during that time. A lot of exit. That's why I trade 4 or 5 pairs, so that if I can get 20 pips each, that's better than trading 1 pair, and because you know it takes more than 3 or 4 hours sometimes to even capture 80 pips on 1 pair. So why do that? Find those areas that you know the market's going to retrace, take advantage of it, and place trades on 4 or 5 pairs that are correlated. And that's the key. Find pairs that are correlated. Pound Aussie, pound Euro Aussie, Euro New Zealand, pound New Zealand are all correlated pairs. Okay, and same thing here. The market shot up. Thursday was a really strange day because it shot up, came down, shot up, came down. Here's the London close down here. So we would be taking a trade in the opposite direction, which would be going up instead of going down. Okay, so the market essentially was like selling off on this day, and then it found support down here, and this would have been your trade right there. Okay, unusual because usually markets go up when it's trending, and then you take a counter trend trade. Here it sold off at the New York session, so at the London close you're looking to buy. Okay, so you got to be very careful. You've got to look to see where the market was been before, and if the market was up and at London close it closed down, then you want to be buying, not selling. Okay, let's look at a few more. Here it didn't really work. Actually it worked, but this was like a turnaround, probably a turnaround Tuesday if I'm correct. So the market sold off, found support, London close, right? And this whole level here was the London close. And I just want to highlight it so you can, it's a lot better just to highlight the area. So you see all this area is a retracement area, so you would buy. And I would have probably gotten out before the Asian session because that's what I normally do is I take the trade, the London close. But by 5 or 6 p.m. Eastern, I'm ready to exit that trade because I'm placing 4 or 5 trades, 20 pips each. I've met my goal. But this thing just turned around and went north. So you could have stayed in if you would have known that not to get out of this trade, or put a break-even stop loss and stay in the trade. Okay, let's look at some more trades. And again, we can do this over and over and over for so many pairs, and just see how consistent the London close retracement is. Here the market sold off. Here's the London close here, turned around and went up. Okay. The times that I don't really take this trade is when the markets consolidate. Then I start looking for another pair. So here the market initially started going up, then it sold off, London, New York session. Here's the support, London close, started going up. Okay, nice run up over 100 pips on this pair. So let's look at another pair. Pound Aussie is going to be essentially the same thing. Market went up, but it sold off by London close. You would have taken a trade down here and ran up on it. Here the next day market went up and London close. This is actually the London close right here, so it went down. Okay, and I would have gotten out because the Asian session would have been here, so that was a trade you would take. Went down 50 pips. I would have probably just captured 20 pips out of this. Okay, and let's move on to another pair, another trade here. This is a perfect one because this is what usually happens. Markets, they rally, they go up. London close, 222 pips, reverse position, went down 50 pips. By the Asian session, it started resuming its trend because that's the markets usually do. They rally when they're in an uptrend. London close, there's a retracement. By the time the Asian session rolls around, it's ready to go back up again. Okay, and the other one is pound yen, which is one of my favorites because there's substantial moves on this pair. Okay, even the retracements are substantial. Sometimes 60, 70, 80 pips retracement consistently. And here's a perfect example on this day. Market started down here, right? Here's the beginning of the session, went all the way up, 265, went up through. If you want to know what this retracement is, this is the 6 o'clock retracement, and that happens a lot. So here's the market started off at the Asian session, continued to go up. London close, turned around, gave us 158 pips on this day. Here's the London close up here, went down 125 pips. Here's the London close down here, market sold off, so you would be buying 64 pips, but it continued because it was a sell-off, but continuation of the trend. You could have stayed in on this trade, okay? So trading pound New Zealand, pound Aussie, Euro New Zealand dollar, Euro Aussie, one of my favorite pairs to trade because, again, London close, retracement's consistent. You just have to follow those guidelines. First, has the market put in its daily range? Number two, wait around 1, 2 o'clock in the afternoon to take that counter trend trade. And three, get out around the Asian session, unless, of course, the retracement is in the direction of the trend. When you're getting in is in the direction of the trend. For example, here, then you may want to stay in that trade through the Asian session. Okay. And how do I calculate? How do I know the market's in an uptrend? Very simple. Go to your daily chart. And if you look at this daily chart, look at the market. It started all the way back in the beginning of April. The market was in an uptrend. Higher highs, higher lows. So you see this, you highlight this area. I'd like to highlight the area that the market's in an uptrend. So it reminds me that when I look at the 4-hour chart, this whole highlighted area on the daily chart, we're in an uptrend. So what would I do? Well, I start looking for dips to buy because I want to be trading in the direction of the daily chart. So that's the 4-hour chart, and here's the 1-hour chart. And you can tell on the 1-hour chart we're still in an uptrend, right? Higher highs, higher lows, and take trades in the direction of the trend. Take only a counter trend trade during the London session, and I always get out early because I'm not interested in taking counter trend trades and staying in for long periods of time. It's only a retracement. You're just trying to capture that small amount of retracement that happens every day at the London close, and it's usually between 20, 40, 50 pips. And if you can do that with 4 or 5 pairs, 2 or 3 hours, you can bank 80 or 100 pips. Okay, that's it. See everyone next week. Remember, I'm going on vacation on the 16th, so that week we'll have just limited amount of sessions, maybe just 3 days. But still, the most important days, Tuesday, Wednesday, Thursday, and usually Fridays are retracement days. And then I'll give recommendations. If the trade room is not open, I'll just email you with a video with trade recommendations, Sunday to Monday retracement. Okay? Have a good weekend, what's left of it, and I'll see you guys next week. Thanks for watching the video.